I'm going to talk about Vinati Organics because this stock has gained as much as 60% in the year so far. We've seen a little bit of volatility in the recent times, but in the long run, if we pitch the margins over the last 5 years, we have seen a constant improvement for Vinati Organics. The reason why I bring out the margins in the 5 years is because Vinati Organics has a lot of plans over the next 3 to 4 years in terms of capex and commercialization of new products, which has been outlined not only in its annual report but in its recent conference calls as well. So, well, for that, we are in conversation with Vinati Saraf Mutreja, the ED at Vinati Organics. Thanks a lot for joining us, Vinati. Before I move into the plans that you have over the next 3 to 4 years, I'd just like to touch base with you on what's going on right now. Now, from what I understand is that you have seen good volumes coming in for your ATBS, but on the other hand, IBB has seen a little bit of slackness in demand. Please correct me if I'm wrong, this is because of one of your large clients in IBB that they had shut production temporarily. Can you give us as to what's going on in both these chemicals with respect to business and how you expect this business to pan out, say, over the second half of this financial year?
Sure, both IBB and ATBS contribute to about 65–70% of our total revenues. So they are very important products for us, more so ATBS, which has about 45% share in our sales. Now in the ATBS segment, what has happened is one of our large competitors in the US has just announced that they are going to exit the business. They're going to stop making ATBS. So as a result, we have seen a sudden surge in demand for ATBS, and we are running at good capacity utilization levels. Going forward also, we are very positive on ATBS because it is used in polymers that go across industries such as water treatment, enhanced oil recovery polymers, personal care, construction chemicals, etc. As far as IBB is concerned, IBB is used mainly to make ibuprofen, the painkiller. Now, globally, the demand for ibuprofen is also growing because people's tolerance towards pain is decreasing. A lot of demand is coming from developing countries like Africa, Asia, etc. Now, temporarily, you are absolutely right. One of our large customers has taken down a shutdown, but only to increase their capacity. Therefore, even in IBB going forward next year, we expect the demand to increase and an uptick in volume in IBB as well.
Hi Vinati, good morning and thanks a lot for joining us. I wanted to check, do you have any direct Indian competitor with regard to ATBS?
No, we are the only manufacturer of ATBS in India, and yeah.
Great. So that's the product which contributes the most to your top line, and what you just alluded to, that one of the international players have said that they no longer are going to produce that. What's the kind of impact that can we see? Because you're saying the demand is going up in the second half. Do we see that contribution to your top line from this product going up? And also, if you could tell us, what's the kind of margins that you get from ATBS?
So ATBS itself will grow year on year, I think, for us at about 15–20% volume wise. Now, its share in our total revenues will remain at 45–50% because our revenues will also grow from other products. Like I mentioned, IBB will also grow, but we are also adding new products. This year, we've added 2 isobutylene derivatives that go into personal care. We are doing setting up a new plant to make butyl phenols, from which we expect total revenues of more than 300 crores. We will see the effect of these revenues coming in FY19 onwards. We are also going to get into manufacturing PAP. Of course, that will take a bit longer because that's an investment of 600 crores. That will add to our revenues after FY20. So the share of ATBS in our revenues will remain constant, but ATBS total volume-wise will grow 15–20% year on year.
Okay, Vinati, we've also seen your gross margins come off to a certain extent. Now, I also want to understand your exposure to crude-linked raw materials, because we are looking at a little bit of an uptick in crude oil. What does that mean for your top line? What does it mean for your margins? And whether or not we can expect improvement in margins from here on for the second half of this financial year?
See, first half the margins were low because of a couple of reasons. One, like I said, IDB offtake was low because of a temporary shutdown, and secondly, some of our specialty products, which are used on a campaign basis by our customer, usually see volume demand only in the second half. So anyway, second half margins will improve on account of IDB and the specialty products. Now, what was your other question?
Whether or not we can expect an uptick in the crude linked raw materials, especially considering we are looking at an uptick out there.
Yes, yeah, crude. Yes, so most of our raw materials we are buying from refineries, so they are based on monthly prices, so more or less linked with crude. So as crude prices move up and down, our raw material prices move up and down. We have formula based linked contracts with all our customers, so even prices of our products move in line with that of our inputs. So as crude goes up, our final price realization go up, so it affects positively on the revenues. As far as margins go, the dollar per kg margin remains fixed whether crude moves up or down. So historically, when crude prices are low, margins as a percentage of sales are high, but when crude prices are high, margins as a percentage of sales are lower.
Okay. Vinati, it's too early for me to ask, but you guys have already done a buyback this year. I just wanted to check, the promoter stake as of now is somewhere about 73.9%. Would you like to meet the threshold of 75% anytime soon?
Well, that is always at the back of our mind. If you see, we have consistently increased our stake from 69% to 74% now. So at some point, yeah, we would be like to be as close to 75% as possible.
Okay, Vinati, a final question from my side when it comes to your future plans. Now, what we understand is that you are looking to commercialize PAP, that for our viewers, for the benefit of viewers, that's a raw material used for paracetamol, and IBAP products in the next 3 or 4 years. Can you tell us about how you intend to, fund the capacities for these operations, and also what can we expect, say, for example, around FY20, FY21 when it comes to these products in terms of contribution?
See, PAP will add about 600 crores to our top line after FY20. The second big investment that we are doing is in butyl phenols. PAP investment is about 600 crores, butyl phenol is 220, 250 crores. So total we have a capex plan of 900 crores over the next 3 years. So total from a 900 crore capex, you can expect revenue generation of 900 crores. Our annual cash generation is a little over 200 crores. So, and right now we have 150 crores cash in hand. We have no debt on our books. So the plan is to fund these projects through internal accruals itself, and if need be, if there's a shortage for some time, we'll take some debt if required.
All right, Vinati, appreciate you joining us today and taking us through the development at Vinati Organics. Well, that was the management of Vinati Organics, very confident of maintaining those margins of about 28 to 30%.